Welcome to our panel entitled Crypto and the Evolving Regulatory Framework. As was introduced, my name is Uğur Köylüoğlu. I'm leading digital assets globally for Oliver Wyman. As a management consultancy, we do work with the regulators, crypto-native firms, traditional banks, and investors at the same time. And today I'm joined by a highly accomplished panel, and you can find their extensive bios in the app. But nevertheless, if I were to introduce very quickly, we have Jack Hardman, and Jack is with Clifford Chance. Clifford Chance is a preeminent law firm and really focused on digital assets. Jack covers the Middle East. Naveen Gupta is a managing director with Ripple, covers South Asia and MENA region. Naveen was with Citibank and HSBC before in transaction services and payment businesses. We have Mohamed Rafi Hossein, who is the CEO of Facet. As you would know, Facet is really focused on financial inclusion and wealth creation. And we have Joseph Dalago, who is the CEO of Rain, and Rain is the largest cryptocurrency exchange in the region. Now, as you all know, crypto assets had been around for a while, but the regulatory efforts really accelerated in the past few years. And this is somewhat related to the fact that crypto is no more niche. It came to mainstream, but also, and more importantly, related to the catastrophic failures last year that really resonated the importance of consumer protection, investor protection, and market stability. So with that, I'd like to thank and congratulate the IFC organizing this event and accommodating this panel. Before we start talking about crypto regulation, I wanted to hear from our entrepreneurs how crypto really creates societal value. And these will be like quick questions, starting with Naveen, please.
Yeah, absolutely. So let's just take a simple example, right? Crypto trades 24/7, 365 days a year. Traditional finance doesn't, which means if somebody wants to send money from point A to point B, they can send it 24/7, 365 days a year, finality achieved with real-time live rates. So for example, in cross-border remittance business, it can be cheaper, faster, better in a significant way compared to the traditional business. So every day, for people who send about $155 trillion globally in terms of cross-border movement, it can have a big impact.
What do you think, Mohamed?
Absolutely. I mean, I think when it comes to regulation, we talk a lot about, the negative, let's say, enforcement on regulation, which is rightfully so. So when we think about, stopping fraudulent projects from hitting the market, when we think about curbing the casino-like atmosphere that some of crypto has become, when we think about curbing excessive speculation, these are all things that should be regulated. But what we don't talk a lot about is when regulation should be a positive reinforcement for what crypto really brings to the table. And it's just not spoken much about. Crypto may not, in your opinion, be the most powerful technology of our time, arguably, but definitely, I can unequivocally tell you that it's definitely the most impactful. And it just comes down to two words, really, which is property rights. That element of crypto that unequivocally, immutably, irrevocably makes someone into an asset owner without any third party is extremely powerful for most of the world. So when we think about that part of regulation, that how can the regulators, how can we as companies positively push the fact that we can have a new wave of asset owners that have an asset to their name, which government, which economy, which company doesn't want to be part of that impact that we can unleash to the majority of the world.
Joseph?
Yeah, definitely. Hello, everyone. So as you mentioned, I think that the last couple of years in the industry have been incredibly eventful. I think the industry's learned a lot. We've certainly learned a lot as a company. But the transformational impact of crypto is still just as potent as it was 10 years ago as it is today. And the reason being is I, along with our team and so much of the industry, believes crypto is the next evolution of money. And what we mean by that is, we as a species, we've had various forms of money throughout history, dating back to clay tablets in the earliest forms, precious metals, even shells. And today we use paper money or electronic money, and crypto stands to be the next iteration of money. It has some really notable qualities. It, as Naveen mentioned, it's globally transferable. It's very low cost. It's very fast, and it's very low barrier to entry. Anyone with a mobile phone or a laptop can use this technology to send value around the world, and that's incredibly powerful, and it's up all the time. So yeah, I think it has some incredibly transformational effects, and we're really just getting started and continuing to advance the industry with some learning lessons along the way.
Joseph, let's stay with you, and I'm just wondering, what your thoughts are in terms of whether crypto should be regulated and why, and would more regulation spur growth or stifle innovation?
Yeah, I think crypto businesses should absolutely be regulated. I think that seeing crypto succeed is so much easier to see because we already have a massive, decentralized network that has worked in history, the internet. I think you can parallel the two industries in so many different ways. The internet is, as a whole, the protocols that govern the internet are not regulated, but the internet's execution in each country is regulated. ISPs are regulated, usage of the internet is regulated. I think crypto will follow in much the same footsteps. So the protocols, the coins themselves, cannot really be regulated because it's a decentralized technology that spans the globe. But the usage of specific coins, the usage of specific technologies, as well as the operations of businesses that either buy or sell crypto or use crypto, I absolutely think those should be regulated in each country individually and based on the beliefs of that particular country. And that's really what we're seeing work out. And I hope that international standards will continue to emerge so that way countries can share information about what's working and what's not globally.
Naveen, can I ask the same question to you? Should crypto be regulated, and
Yeah,
would it spur growth or stifle innovation?
Yeah, so firstly, the answer is yes. So tech agnostic regulation, measured regulation, right? So if you look at, for example, the case of internet, people don't regulate the internet, but they regulate the use cases. So somebody sending emails is fine, somebody selling drugs is not. Similarly, in crypto, it should exactly be the same thing. The second thing is we can regulate the endpoints, right? Entry and exit into crypto can easily be regulated, can be put to the same AML KYC standards as some of the other movements of the money, it could be there. So measured regulation and regulating the use case is the one that will help spur the growth into cryptos or digital assets. And that's what is going to bring the real societal value to everybody here in the room and in the world.
How about you, Mohammed? What do you think?
Absolutely. So I think definitely crypto should be regulated, but I think before we get into the depths of how it should be regulated, there has to be a philosophy and an ethos internationally when it comes to what do we want from crypto, right? And we think about the regulation today from a perspective of consumer protection, that let's protect ourselves effectively from the ills of crypto that we see. But what we really haven't established is what is the breadth and the abilities of crypto in kind of creating an impact and in each and every one of our lives. So going back to my opening statement in the sense that asset ownership or unequivocally being able to put an asset or property under your name, that could be your data on social media, that could be your savings in the form of digital assets. The ability to democratize that and disseminate that level of ownership across the world is very powerful. The regulations that come should be from a perspective of consumer protection, but also consumer enablement for everyone to participate in the upside of becoming an asset owner, which fundamentally can transform the middle class, economies, from a stability and security perspective as well. So that ethos, I think, hasn't been talked about enough. Regulators are regulating from the back foot, whereas I see there's a lot of socioeconomic opportunity if there's an ethos that we collectively disseminate when it comes to crypto.
Thank you. Jack, let's focus on global landscape of regulation. As a lawyer, you are supporting crypto-native firms as well as regulators in different jurisdictions. And we see different developments at different speeds. Can we extend and expand current regulation, or do we need bespoke laws? By the way, for clarity, can you let us know whether this is a commodity or a security or one of a kind? And in the end, if you can really bring everything back to the investors and also crypto firms, how can we really deal with different intensities of regulation across the world?
Thanks. I think the first point to note is it's not, is it regulated, but how it's regulated now across the world, given the movement that we've seen. And for most stable jurisdictions who've not come out and banned crypto outright, which we'll talk about, in most cases, it's either that baseline AML registration regime that you see that follows FATF basic baseline requirement to follow anti-money laundering and financial crime controls in crypto business, or a more comprehensive regime. And generally across the world, we're seeing that where that's adapted, it's learning from financial services regulation and pulling different facets of that to talk about consumer protection and prudential regulation, as well as financial crime controls and various other facets that come with a comprehensive regulatory regime. I mean, looking at the world across the picture, starting in the US, despite the fact there is a huge amount of regulatory work going on there, it remains a huge patchwork of different regulatory regimes, state-level money service business regulation versus federal, CFTC and SEC regulatory regimes that are all sort of intertwined and making it a very difficult picture for firms to do business who need a lot of different approvals. And of course, the regulators are still reeling from FTX and coming up with what they want to do for a comprehensive regime there, whether that's going to be very intrusive and bring those players on board, it's going to try and avoid having those players in the US, or it's going to really just look at helping traditional financial service players move into that area. So I think we're in a real quandary in the US, given the different patchwork at the moment, but hopefully we'll see some resolution. Moving east, though, into Europe, next year we'll see the implementation of the markets in crypto assets regulation, which will be a fantastic sort of game changer, I think, for Europe in how that harmonized regime will come together, drawing again on the financial services rule book and bringing together something which will allow crypto providers to have the whole gambit regulated. Some areas are going to be a lot more intensely regulated than some wanted. Others will hopefully find that it's somewhat appropriate. But that, I think, will hopefully give that international standard that you talked about, Josh, and I think that will perhaps be a leader in how that creates that standard and harmonization, certainly across Europe, and hopefully we'll see a similar, potentially more sort of crypto-friendly equivalent in the UK. Over towards Asia, obviously China has banned crypto, and it remains a difficult proposition in India. So two huge economies that really have not come out with huge regimes yet, and China specifically retains that ban, and there's a lot of circumvention that's still happening. So we hopefully might see some change there. But in the big centers where it is heavily regulated, Japan, Hong Kong, Singapore, the regulatory boundaries have really increased. And what we're seeing is, and I'm interested in views of panelists, clients, taking a view as to whether they want to continue to play in that market, given how the compliance burdens have significantly increased, and therefore we're actually seeing people in some cases pulling back from being regulated in those jurisdictions. Into Africa, where at the moment I think it remains a question of is it banned, is it possible or not, rather than necessarily comprehensive regimes being formed. We're still seeing both a large amount of countries in that jurisdiction that do ban crypto, especially across North Africa, you'll be aware of, but also in other parts of Africa where, like Nigeria, for example, it's essentially very difficult to do business there. Not that it's technically banned as a concept, but the banks are not able to bank customers in that area, and the central banks very much keep control on the areas as related concerns they have, not just from a crypto perspective, but the impact that market has on their incumbent currency and incumbent exchange controls, which create a sort of real difficulty in doing business. So there's obviously, just to touch on offshore centers quickly, there's still a number of offshore centers around the world that have very quite, I would say, crypto-specific regulatory regimes focused on a principles-based regime to regulate, like Gibraltar, the specific incumbents in their market and focus on bespoke regimes to suit them and bring people into those offshore centers. So that's still I think, a viable prospect to think about it. I think that then takes us to where we are in the Middle East. And I think Dubai is unique, I think, in the world, regulators would say, given we have, I think, a concentration here of world-leading regulatory systems, both taking two examples, the VARO regime that we've all seen, that's come out and really been built around the incumbents in the crypto market and create a crypto-specific regulatory regime, which is getting a lot of success and traction, given it was developed for those incumbents, and we're excited to see that sort of really hitting the market now and having a lot of success. Around that, of course, the DIFC, where sponsoring the event today, and they who've also built on their sort of internationally renowned financial services rulebook to add on crypto asset activities in an adjusted manner, recognizing certain crypto assets they want to deal with, recognizing providers can engage with sort of internationally equivalent jurisdictions in where they're operating, and really harness what they've achieved in their rulebook and bring that to the crypto market, which is also very exciting. Just to your question about, I know we're short on time, about is it a security or a commodity example, I think world over, one consistent theme that we see is that if it smells and looks like a security, if you have a claim on an issuer, if you have a right to an income stream, cash or otherwise, and what you're dealing with is fungible in nature and transferable, then it's looking really like a security. And we see a lot of propositions coming that maybe follow the terminology of a token or otherwise under a basket of assets and seek to sort of replicate a similar financial outcome for investors, and maybe think that could still be in the token space. But unfortunately, what we tend to see is that does, if it's given how you define a fund, for example, which is very broad and substantive and not terminology based, it is very difficult to evade that security classification if you have got a right to an income stream. But of course, for many other areas, we see payments and utility tokens still able to avoid that. So I would look at the substance of it. And finally, to your question about how market participants are reacting to this, we're seeing, and interesting other views, market participants thinking twice about whether they have so many licenses across the globe now. Is it worth playing in so many markets when they're having so many regulatory issues there? And I think the reaction we're seeing is that where regulators are not getting it right, incumbents are really thinking about where they're going to stay in that jurisdiction.
Thank you, Jack. So I want to just move now our attention to the investor sentiment. As you all know, Rain is a big player in the region. You might even have some users in the audience who are buying and selling Bitcoin and other cryptocurrencies in a compliant and regulated way. What is their sentiment? Is more regulation good for the investors, or is it bad for the investors? Can you really expand on it? And can you also kind of tell us more about your views on this patchwork regulation, how that impacts international investors?
Absolutely. So yeah, just and just as context, Rain is the largest regional cryptocurrency exchange. We started in 2017 and worked with the Central Bank of Bahrain for 2.5 years to form the first license of its kind around crypto assets in 2019. And we raised $110 million from Kleiner Perkins, Coinbase, and Paradigm. And today we have about 1.3 million signups and 500,000 trading customers, and did about $4 billion in volume over the course of our history. So we're really proud of the work that we've done in the region, and we've created a really high quality cryptocurrency exchange in MENA. And as for your question around the sentiment of customers, I think that now more than ever, customers are really appreciating Rain's unique style and doing everything the right way. With the collapse of FTX that we saw last year, we really saw the value of regulation come into play. With regards to regulation, it's always a balancing act. On one side, you have the dangers of unfettered and unchecked capitalism, which leads to situations like FTX, and there have been countless other examples throughout history. And then on the other end, you have stifling innovation, slowing new industries. So regulators have the really difficult job of finding a balance between those two things. And it's all about really thoughtful regulation that doesn't stifle innovation but protects customers and protects people against the effects of money laundering and terrorist financing. So we've always worked right alongside regulators, especially in Bahrain and also here in the UAE. And I think we're at a really exciting time here in the UAE because there's so much attention around the space and there's so much great work being done. And we're very close to having fully operational exchanges here, and we'll have some exciting news as well coming up shortly on that. And we have an in-principle approval license with the ADGM, and we're doing some really exciting things as well in Dubai and with VARA as well.
Thank you.
Thank you.
Next, I want to move to Mohammed and really focus on financial inclusion and wealth creation. Facet is focused on underserved population. So I'm just wondering, what do they think about crypto regulation? Also importantly, do you have any views about how can regulation promote financial inclusion, and how can new products such as tokenization create wealth for underserved population?
Absolutely. For me to answer this question, it's really important that everyone really understands the predicament in which most of the emerging world lives in. And I'm not talking about just, when we think about underserved, I'm not talking about poor people. I'm just talking about the average person, went to a good university, lives in one of the more populous countries of the world. What is his or her predicament when it comes to asset ownership, wealth creation, investment? The reality is that he or she may own an iPhone or a Google phone. He or she may be participating in this decarbonization process of moving to an electric vehicle, as an example. But does he or she have the ability to own a piece of the upside from purchasing that iPhone from Apple, or from purchasing that, or searching on the internet with Google, or participating in the electrification of the auto industry, right? That type of tangible economic value is what crypto can capture. It can disseminate, and it can democratize that access to opportunity in terms of its upside to anyone and everyone, irrespective of race, creed, religion, geography, right? So the crypto that we've seen to date has been all about, digitally native assets that may or may not have a use case. The truth of the matter is most coins and tokens probably don't have a use case. I think we can all pretty much agree on that. But encapsulating the tangible economic upside of things that we use on a regular basis and crossing that value beyond borders into the hands of anyone and everyone, that's really powerful. And that's where regulation needs to go. And from our perspective as Facet, that's actually where our name comes from, right? I mean, if you look at, asset is the foundation of our name as Facet, and we like to look at assets from a multifaceted perspective, that not only can we encapsulate economic upside into a token, that we can disseminate it across borders to people who believe in real economic value and want to participate that from a family perspective in terms of wealth creation, and who may want to collateralize that for other products that enable them to live a better life at a better standard. So when we think about emerging markets, when we think about crypto, it's bringing the value that we're used to. I'm from Los Angeles, parents are from the UK. We're used to being able to diversify our economic interests in a variety of risk-return profiles. But that opportunity is not afforded to the wide majority of people, both educated and perhaps not educated. And what crypto enables us to do is get a variety of these types of assets, tokenize it, encapsulate it, disseminate it, educate people on it, and we create a more egalitarian socioeconomic picture where everyone has a chance to participate in wealth creation and asset ownership.
Thank you. Let's stay with financial inclusion and then talk about remittances as a product, Naveen. This is obviously very important for the region. How can regulators really work together to enable flow of funds cross-border, especially for remittances? And then just bring us to a higher level, and please share with us your thoughts about some of the principles that people who are working on regulation perhaps should think about as we progress in the space. And there are surely challenges and hurdles. I'm curious about your thoughts.
Yeah, sure, absolutely. So let's just do how many of people here work in the GCC or live in the GCC here in the room? right? So maybe about 50%, right? But let's assume there are 6 countries in the GCC. If you were to send a wire transfer from one of the countries to the other country, you know how many days it'll take? Like just to transfer simple money. It'll take 2 to 3 days for once the account gets debited in country A and for the account to be debited in country B. Whereas in 10 minutes, probably you can drive across the border from one country to another wherever, for example, we are sharing the border, right? So the economic systems are not keeping up with both the interest and what you could essentially do in person and physically, right? So let's take that in a life of a buyer and a supplier. So let's assume there is one buyer in the room and there is one supplier in the room, right? So every time, let's assume the net days, the term is 30 days. That means the buyer pays the seller in 30 days. But you get your money in 33 days, which means, let's assume you were, instead of using a traditional method, you would using a digital asset or a cryptocurrency to make the same transfer through, for example, a USDC or one of the stable coins, or for that matter, Bitcoin, Ethereum, or XRP, the money will be in your account almost instantly, which means, say, on a given year's time, you will shave 36 days of working capital, right? Which means in 365 days a year, instead of losing 3 days every month into 12, that's 36 days of working capital that is getting saved. So that's 10% more productivity with the same amount of capital deployed, right? How many of you would want to have 10% more productivity with the same amount of capital deployed, right? It makes so much common sense. And that too, with neighbors whom you want to do business with, buyers and suppliers whom you want to do business with. And that's a difference something like digital assets or crypto can make. It can transform economies. So earlier, central banks were only responsible for managing risk in the system, but now they're responsible for growth as well. So if somebody can get 1 or 2% growth in the GDP just by changing the velocity of money, why not? So to me, this is a big use case of remittances, for example, just in GCC. By simply increasing the velocity of money, you can get higher growth rates, you can reduce the amount of working capital, and you can improve productivity in all the 6 economies. Otherwise, everything will just talk, right? I mean, people talk about GCC as a concept, but if you're taking 2 or 3 days to transfer money, then it's a concept which doesn't really materialize into economic benefits for the population as a large. And then the point that you make is, so let's assume we come on the top level. What do governments want to do? What do regulators want to do? The first of all, what they want to do is bring benefits to their people who have elected them or who have essentially appointed them in that post. And if they want to, then they have to look at the benefits that digital assets, blockchain, crypto can essentially bring to the masses, right? And it could be in form of lowering the cost. It could be in the form of reducing or removing intermediation, which may be hugely at that particular point. And let's assume that those benefits are getting delivered. Then they need to look at the regulation to say how the protection can be maintained at the same time. So it's the risk and the reward. You can't just look at the risk in absence of the reward. If you look at the reward and the reward is high enough and the risk is manageable, then the regulators have to come around to say, hey, what should be that measured risk that should be acceptable, and that protection against it should be put in place. So that's really the role of the regulators to essentially say, how can we deliver the maximum benefits at a measurable risk that may be possible?
Thank you. So as a group of panelists and the moderator, with none of us being regulator, we covered a number of topics about the global landscape, investor sentiment, financial inclusion, as well as perhaps some principles for the regulators to think about as they progress. I'd like to give a chance to our panelists to perhaps really come up with their closing remarks, something punchy and short. Maybe we can start with you, Jack.
I think what's coming in regulation, I think, is increased harmonization and increased adoption of international standards in the way that we've seen in other industries. I think that's going to definitely accelerate. We have next year many new big regulatory regimes coming into effect. MiCA is a good example in Europe, and I think we'll see that accelerate and modernization quickly fill up. I want to see more traction in the US, for example, and it would be great to see some movement there. I do worry that the political logjams are going to get in the way of that, but I think other jurisdictions are going to start to take over.
You said punchy and short. So this is an idea whose time has come. So either get on the bus or the bus is leaving without you.
Absolutely. I think the short of it is that that change is happening. I think there's 1 billion people coming into the markets. You know, we're regulated in Indonesia, where we see 40 million crypto users getting more educated and more nuanced. We receive various forms of approval from the governments of Bangladesh and Pakistan, where crypto was previously banned, but now they understand how economic value can be transferred. Here in UAE and places like Turkey, where we're regulated as well, or in the process, we see that the regulator is not just looking to regulate crypto, but really open up other opportunities that the technology can harness from a consumer perspective. So it's an exciting time. That right there that I mentioned is about 1 billion people under 4 or 5 regulators that are very keen on bringing this new wave of innovation.
Joseph?
Amazing. I want to see crypto regulation or regulatory clarity for crypto in every country in the world as quickly as possible. I also want to see more standardization across the world in terms of how it's regulated. And lastly, I'd really love to also see just more nuanced discussions being had at the regulatory level around individual assets and the whitelisting or blacklisting of individual assets at the regulatory level, because I think that's really where the important discussions should be had.
Thank you. And my take is we need...
And sorry, just one last thing to clarify that is that what Mohammed said earlier I think is very important, that every coin and every token needs to be looked at individually as its own thing. You know, Bitcoin and Ethereum are on a completely different class than 99% of the other assets out there.
Absolutely.
So that's a really important thing that people should keep in mind. Like, often we use the term crypto as a very general blanket term. But when you dig into the industry, you have to consider every coin, every token individually. What is its monetary policy underneath? What are the rules that govern that? You know, what's the technology that governs it? So that's a really important thing that everyone should know.
Yeah, I second that as well.
Likewise.
That's a good point.
Great. So my take is we need balanced regulation that will protect the consumer and investor and not stifle innovation. And that is hard. So I applaud all the jurisdictional sort of regulatory leaders taking that challenge. It's very easy to forbid crypto and digital assets. It's very difficult to come up with a regulation. So let's work on it together. So with that, please join me with a big round of applause to our panelists. Thank you very much.